And I'm going to go and kick this off. I'll hand it off to Carolyn about halfway through, and then I'll bring it back and have a couple of fun things with this. We're going to try a few new things here that you'll start seeing in the trading room right after this as well. In fact, probably tomorrow, which will be a lot of fun. But we're just going to dive into this. And for some of you, you're absolutely familiar with Carolyn's work and kind of understand what she does, what it means. For some of you, you have no idea what we're going to be talking about tonight. But the exciting part is that for those of you that are the uninitiated into this work, it opens up a whole new world and a whole new perspective on how the markets really work. And then even if you are familiar with it, what's nice is it's always getting that refresher, because you're always going to kind of go back and say, oh my gosh, I wish I would have paid attention to that piece of information at that particular time. And especially with the markets right now, because they are so subjective and so wild, yet all of this stuff has been working like clockwork, even in this quote unquote uncertain environment. So we will dive right into this. And so what we're going to be talking about here, and some what you can expect today, or tonight, it is tonight, right? It is Thursday, crazy week. Learn how to predict high probability setups with at least a 1-to-4 risk to reward ratio. Okay, that means risking 1 to make 4. The importance of projecting, right? And this is really, these are kind of the two keys here that are really different than anything else you've ever seen before. But the importance of projecting well in advance the price zones which have the greatest probability of support, resistance, and trend change. And next, and this is the piece that actually took me the longest to get my arms wrapped around, but the importance of projecting well in advance. Again, not hindsight, not in the moment, well in advance so you can plan for it, the time where the greatest probability of trend change will occur, okay? There is nothing else on the planet that does this. Again, projecting well in advance the price and projecting well in advance the time at which it could either A, get there, or reverse from there, all right? It's pretty crazy. I've talked to a number of people that once they came across this work, first of all, B, or two, they took the time to actually dive in and understand it. Okay, this isn't something where it's like a pretty color on a chart. It does take a little bit of work to understand it, but then from there, their trading lives completely changed. All right, that's the stuff that's kind of fun. So let's dive in and take a look at some of this stuff. So what I'm going to talk about a little bit is what I've learned from the whip. All right, so basically, Carolyn has been doing this for a long time, and she's like, you know what? I don't have time to listen to this. If you're not going to listen to me, you're going to get a whipping. So I usually get a whipping about once every 6 months, and that gets me right back in the line, so which is great. And then I'm going to talk about the benefits of what I call the 3D strategy. Okay, we're going to look at entry triggers, the best tools to confirm the entry, my goals with this, what I want you to gain from the class, and then also at the end of this, I'm going to show you actually a specific. Well, I'll show you that at the end. It's kind of fun because I'm looking forward to it. And then we are going to hear from the queen herself, Carolyn, and then we'll do some Q&A from there. Okay. Oh, good. Okay, finally, Derek. Gosh, we've been waiting for you. So trading journey. One of the most important steps in achieving consistent trading results is to be able to project the extent of trends and the time and price reversals in advance, okay? I traded for a long time without knowing this or understanding that it was even possible. And when you start to look at the markets after you know that this is a possibility, the whole markets really change. You stop looking at things like stochastics and all this kind of different stuff. You're not looking at the day-to-day action. You're actually looking at the projections that are out in the future, 1 week or 2 weeks out in the future, and you're seeing where things are going versus trying to figure out what's happening today, okay? Because you guys know if you're really caught up in what's happening today, you can get so laser focused in on the price action that you lose sight of the big picture. You lose sight of where things possibly may be going, right? But that's the market's job. The market's job is to trick you from not even paying attention to that, not even seeing that out in the distance, whereas this kind of work actually keeps the road path clear, so it keeps you from getting like caught up in all that mess, okay, which is great. So So the question is what is this? So let me show you a couple of examples of how this works. So this is the S&P 500. All right, now this was September a year ago, but the same things have been setting up for over the past year, and the same things are setting up here as we talk. But this, I love this example because you can see here that from bottoming out in July, we were in this uptrend where we had push forward, pull back to the 8 EMA, right? If you pull back to the 8 EMA and hold, that's a strong trend. Boom, we make new highs. We come back, it's a little sloppy, but we're still holding that 21 EMA. Boom, we make new highs. We come back a little sloppy, but we still hold that 21 and 34 EMA. Boom, new highs. We come back 21 EMA. Boom, new highs. So at this point, anybody who's looking at the markets and has read a book on trend following has a very easy assumption that they can make. Wow, I'm going to buy the next pullback here because guess what? We're most likely going to make new highs. And what happens is after this happens 6 or 7 times, that's when people get the most confident. Well, I didn't catch this one. I didn't get this one. That one didn't make sense. But now, gosh darn it, I'm going to load the boat right here. Okay. And that's kind of human psychology and how it works. So what happened? So now we can see when we look at this, that here was the high. From there, we did indeed pull back to the 21 period moving average, and it looked like we were going to bounce, and then we puked, and then we puked, and then we puked some more, okay? So the question is that if you're looking at the indicators, was there any sign that that was going to happen? No. If you're looking at the volume, was there any sign? No. I mean, yeah, there was a little spike there, but it stayed the same. There was nothing here between here and here that showed that there was even a remote possibility that it was going to happen. Okay, and then by the time you realized what was going on, it was too late. All right, so what happened? What happened is there's this thing called timing. And in fact, Carolyn looks at this stuff in advance, okay? Here she is setting out something on Twitter on September 21st, the day the market's making new all-time highs, the day everybody is so bullish. She's saying, hey, heads up, guys, cash timing chart says that we'll terminate the recent rally. More details on the update. Bada boom, bada bing. That's timing, okay? That's the kind of stuff where if you are unaware of it, you are trading uninformed and you can get run over by a steamroller like that, okay? So what about the news? It was interesting. I was just recently in Dallas at the expo, and I had a couple of people asking me, you know, what about the news? What news sources do I watch? And my answer was, I don't. And they just said, well, how do you know what's going to happen in the market if you're not watching the news? Okay, well, if you look at that last decline, surely you would think that the financial press saw that coming, right? Now, remember, those stocks topped out on September 22nd, and from there they nosedived. So let's look at what the news headlines had to say then, okay? So here's September 27th. September 27th, 218. So much for September being awful for stocks. Mr. Bell is looking for a 7% gain for the S&P 500 over the next 12 months, okay? And then from there, on September 5th, you can see here that forget the September swoon, stocks will soar 5 to 10% by the end of the year, okay? And of course, what happened was they actually fell 500 S&P points. So if he only knew about projecting well in advance, the day where the greatest probability of trend change will occur, he wouldn't be living the rest of his life with this prediction in the press. So that's the kind of stuff, and that's why you don't pay attention to the news, because they don't know. You know, they don't know about this kind of stuff. So the market is a dynamic place where emotions can change in an instant. I love tools like the squeeze. Obviously, I want to pay attention when there's a squeeze, but there's not always a squeeze, okay? The squeeze only happens about 20% of the time. So, and then of course, feeling like it's going to go up or feeling like it's going to go down never works in the long run. Our feelings betray us, okay? And when you start really getting into what feelings are, you start to realize that they are the most unworthy thing. They're like your worst enemy. So when you're feeling something, if you learn to just ignore that feeling because it has nothing to do with really who you are or what's going on, not only will your life be a lot happier, but your trading will be a lot more accurate, okay? So from there, let's take a look at another example. So that was the S&P 500, right? So what about stocks like Amazon? All right, so again, here's Amazon. Huge move here. Man, it's breaking out. Most people, when they see this, it's like, you know what? Gosh, if I could just buy the next pullback, or screw it, I'm going to chase it here because obviously Amazon's going to keep going up. Right now, it looks really good, right? This thing is obviously going to go higher. There's nothing to tell you otherwise. And what happened instead is that was the dead high, okay? And from there, Amazon fell over if I can do math, yeah, $500 a share, which is a lot for a stock. All right. So again, was this totally out of the blue? Was this news driven? No, this was timing. Again, weeks in advance, Carolyn's like, guys, that's not a good idea to be going long Amazon here. I got timing for a reversal. Oh man, and that's happened sometimes where I'll like a stock, I'll forget to look at the timing, I'll put it on, and that's where the whip comes out. And Carolyn reminds me that I can't ignore her work, but that it will be very painful. And I thank her for that, and then I reverse my position. So then the next thing is on something like this, typically what will happen is this is where people also then get the most bearish. Why? Because news stories reflect price. All right. This is one of the lessons, one of my trading mentors, Peter Borish. He wrote the foreword for my book. He was the head of research for Paul Tudor Jones, and he used to implore me to say, like, John, first price, then news. Okay, what does that mean? Well, when Amazon like this is falling, the financial journalists who are making $35,000 a year, their boss is screaming at them, we got to have news on Amazon. Why is it going down? They have no idea. They look at Reuters or they look at any news service just to see what's out there, and they just pick some random stories that sound like bad news. And then what happens is the bad news hits, and then everybody gets bearish, when in fact the bad news not only has nothing to do with the stock, but the bad news is already priced in. So again, we want to know, is there timing? And lo and behold, there was a huge off-the-charts timing coming up on that Monday, December 24th, with a huge reading there. And what happened? You can say, like, okay, there we are right there. That timing came in, and that was the absolute lows. And from there, we rocketed over $400 a share. Okay, that's the kind of stuff where you can make a lot of money if you understand what it is, and if you understand how to structure trades in that environment. Okay, so as a quick example, this is Amazon recently. Amazon came up. Carolyn's like, we got support, we got symmetry, we got timing. Awesome. Guess what? I'm going to put on some butterflies. So here is a butterfly we put on. In fact, we got out of this one today. Put it on for $3.40. So on a 10-lot trade, the max I could lose on that is $3,400. Of course, if you have a small account, you could do a 1-lot trade, and the max you would lose is $340. We flipped it out for a 157% gain in 5 trading days. Now, a couple weeks ago, not only did Carolyn have timing in Amazon, but she had timing in the S&Ps. When that happens, I go bigger. This was a 100-lot trade where I bought it at $3.47 and flipped it out at $13.81. That's a 300% gain in 6 trading days, a gain of just over $100,000, right? That's the kind of stuff I like, okay? Me likey timing. So that's what I mean by 3-dimensional trading. Yes, I love a squeeze setup, but that is based on one thing and one thing only, and that is price, okay? You get the narrow price range. It means you get a narrowing of the Bollinger Bands. You get a compression of the volatility. And you know what? You get a big move. But again, it's also one-dimensional. Now, I'm not going to ignore a squeeze. I'm going to pay attention to any time a squeeze pops up. But I also know that it is a one-dimensional way to look at the markets. If you want to have a fully encompassed view of the markets, you want to incorporate time and symmetry, okay? My 3-step process there is, yes, I'm certainly focused on price, but then if I can bring in time and I can bring in symmetry, it's going to increase my odds exponentially. Otherwise, I'm going to get whacked pretty hard on whipsaw after whipsaw. And every time I forget to do this, I'm reminded of it if the markets have these big moves, right? So time and symmetry measure with mathematical precision the projected date and price level where a move is most likely to terminate in advance. That is the entire key to this. Okay, so for those of you that don't know Carolyn, way back when I was learning to trade, I was at the expo, the Traders Expo, and I think it was in the late 90s. And I remember sitting in on a talk that Carolyn was doing. It was the first time I'd seen her talk. She was funny. She was irreverent. She was going through everything. And I remember raising my hand, and I don't remember the question I asked, but Carolyn goes, "That's not really a good question. Does anybody else have any good questions?" And we talked afterwards, and we've actually, been friends ever since. But it was hilarious because she's just like, no, that's not a good question. And at the time, I didn't really understand what she meant. But then as you go along, you're like, oh, okay, I understand why it wasn't a good question. So I thought that was kind of cool. So with that, Carolyn, I'll turn this over to you. And if you want, I can flip through these slides for you. But I've got about 10 or so examples here that Carolyn put together. This is recent work that she's done, and she can kind of jump in and talk about it. Yeah, Carolyn was slapping down the man.
Okay, so do we have sound okay? Good
All good.
evening. All right. Okay, I promise I won't play the whip right now. Anyway, what I do want to do is go over some of these recent setups to just give you an idea of what you should expect and look for with the trade setups. This first chart's a daily chart of Apple. And overall, most of my trades are going to be trend trades. So in the case of Apple, we had a nice bullish pattern of higher highs and higher lows. But what I had to do in here was basically take a lot of these prior swings, high to low swings, project them from the new highs, run all possible retracements on the chart, and then also run all possible extensions on the chart. And then when it comes together, I know that I have a setup. Now, it's even better when we also have timing come together, but this was one of the setups that was in, the end of day video at the 214, 215 area. And from there, we've made new highs. We also had a very short-term micro pullback, which gave you another entry that came in at the 223 to 224 area. And, we've met multiple targets since then. So that's just an example of a price cluster, but without the timing. All right, I have another setup that we're looking at here. This was in Caterpillar. This was another one that, I had put out as far as an alert. And I didn't really understand why Caterpillar was rallying the way it did off of the August lows. I mean, to me, it didn't make a whole lot of sense. And I saw that the overall chart, was a pattern of lower lows and lower highs in the bigger picture. So all I did in this case was take 100% of a bunch of these prior low to high rally swings and project them from the low. That gave us a cluster of resistance at 132.93 to 135.30. And we ended up putting the high directly within that area. So that's, another setup, but mostly focused on symmetry. But these are the types of things that I look for every single day. This next example is in the Dow Diamonds. And when I saw, in August that the market was, falling apart again, I wanted to compare it to some of these prior swings, on the same chart, because many swings on the same chart will be similar to other swings. So we had a prior decline that was 1982. We had another prior decline that was 2026. We had another prior decline that was 2042. And I basically projected all of them from the high that was made in July to look for where we might find some support. And what was interesting about it was that we ended up testing the zone 3 times, and each time there was a trade off of it. All right, now this example actually has some timing in it. Now I do run timing pretty much every single day on the daily charts when it makes sense. But one of the things I've also started doing is I started running intraday timing, and that has been extremely helpful. But in this case, you know, when Facebook was rallying up towards that 193 area, if you look at the chart, you really had no reason to think that the market would roll over. But the problem was we had timing between the 18th and 19th for a possible high. And we also had a huge cluster between 193.21 to 194.69. So you always know that you're supposed to ratchet up stops. I mean, it could have continued higher, but if you ratchet up your stops and the market takes you out, then at least, you know, you missed getting stuck with that healthy decline there. All right, this next chart, this was a setup that we had in Lulu, and pretty much all of these setups have been on the videos or in the trading room. And this is one where I had a combination of multiple 100% projections of prior swings. Now, that's also symmetry. Now, anytime that you see a red line on my chart, know that it's symmetry, because I color coded it so that I would know, you know, what was in there. And symmetry by itself is a very powerful, I mean, it's a very simple concept, but it's also a very powerful trading tool, because you'll see in here there were multiple symmetrical projections. It was also overlapped by extensions of prior swings, and I can't exactly see it in the cluster, but there probably were also some retracements of some of the prior swings. But once again, when you get the cluster and you go down to a lower time frame chart, if it holds, and you look for a trigger. And this one so far is nice. Now this Roku example just happened a couple of days ago, and I believe I actually put it out on the free video. And what happened here was, not only did we have nice healthy support within this uptrend, okay, but we also had timing for a low, and it actually hit to the bar. And this is on a 30-minute chart. So when I run timing in the trading room during the day, I'm basically looking at, you know, you're looking at plus or minus a bar of the cycles. So it gives you, you know, a decent window to look for your entries. All right, now this next example, it actually, I really wanted you to see where the last high came in when the market was, you know, they were basically talking about a double top. Well, we actually did have some resistance via the cycles. I believe it was the 18th through the 20th. You had 1, 2, 3, 4, 5 cycles came together at that time period. So again, you know, we don't always reverse on cycles, but we do often enough that it is so worth watching it, you know, to be prepared for the potential failure. And that's where we started seeing that failure. Let's see. Okay, TLT. Now, this setup in TLT was mostly symmetry, but it also had, it looks like a 50% retracement in there. But what I was seeing there was, I couldn't, we had pulled back so dramatically from the recent highs that I couldn't really see where the support might come in via the daily chart. So I basically had to go back to, you know, the weekly chart, and I took some of the larger swings and projected those from the high that was made in August for the next possible low. And that zone actually did end up holding. Now the zone, it never made the target, but we still have the target, and we are still actually above that low, and we're retesting. So if there are new buy triggers in the next couple of trading days, you're going to want to take it, because that target is still valid. Okay, Tesla. Now Tesla went a little bit psycho a few weeks ago. And when it had that sharp move down, you know, I was like, well, you know, where is there any Fibonacci in there? Because there certainly wasn't a 786 retracement or a 618, because we went through that with that dramatic decline. But I did compare it to some prior swings, and this was a simple symmetry setup where the prior high to low was $35.68, and the next high to low swing was $35.14. I mean, it wasn't exactly the same, but it was similar enough, and it was close enough to look at a trade against that area. And we actually did make those targets that I have here on this chart. I will give you a heads up though to ratchet up stops because of we do have timing for a possible high. All right, but now this is just showing that not only did we have the key price support decision, well, symmetry in this case, but you also had timing cycles. So you had 1, 2, 3. So when you have time and price come together, then those are the trades that I'm a lot more confident in. Okay, it's just something that, you know, nobody else is really going to show you unless, you know, they're doing the same thing.
Now, those are awesome examples, and I think it's one of those things where and it took me a while for this to sink in, because I spent the first 8 years of my trading life just looking at price. And when I was first introduced into Carolyn's work, you know, it's like, okay, what is this symmetry stuff and what is this timing stuff? And it honestly had to hit me in the face a couple of times before I started to embrace it. And because you just don't think like, oh, well, that, you know, that's not a real thing, timing, right? And it very much is a real thing. And what I found with this too is that when you have this stuff mapped out on the charts, and I'll show you how I map this stuff out on the charts here. You know, in life, having conviction in something is great. You know, you got to have something to stand for, right? Or you'll fall for anything. In trading, having conviction is horrible. You really don't want to have conviction on anything. The right mindset for trading is a probabilistic mindset where anything can happen. And the nice thing is when you look at Carolyn's charts and you see timing and you see price and you see projections marked out well in advance, you're reminded of just kind of going with the flow versus getting so set on a mindset of this has to go up or this has to go down, which usually is reinforced by whatever news that you're looking at and has nothing to do with the markets, right? And that's not what we want to do. So what we want to do is that oftentimes when it looks like the world is going to implode, timing and symmetry magically save the day. And we want to keep that in mind the next time we get too bullish or too bearish, all right? We want to avoid at all costs trying to impose our own conviction on the markets, because that's not going to end well. I call this the trap of wanting to be right instead of wanting to make money, because when we follow our convictions in the market, we automatically filter out all evidence to the contrary. This is proven, and this is why a lot of times traders get caught up in losing trades, and they stay with them because they just continue looking for evidence that they're right instead of actually looking at the screen and seeing that they're wrong. So I don't know about you guys, but I'm certainly way more interested in making money than being right. So what we want to do here is we want to learn how to recognize optimal trading conditions utilizing Carolyn's work. We want to identify crystal clear entry and exit signals as well as strategies. We want to learn the skills of trade management, all right? And we want to allow for some flexibility. Okay, so what does that mean? The nice thing about this is that these are tools that are available on most platforms. This happens to be Thinkorswim. Okay, so the tools that are involved in this are Fibonacci retracements, Fibonacci extensions, Fibonacci time series, and Fibonacci time ratios. Now, I don't know about you guys, when I got into Fibonacci's, this is where I lived for a long time. I'm like, oh yeah, retracement. Here's the high, here's the low, you know, here's the 382, 50, and the 618. Extensions, oh, that was a new thing. Okay, if we go up here, there's the 1272 and the 1618. Fibonacci time, I had no idea what that was. Fibonacci time ratios, I had no idea what that was either. So this is kind of what I call quick and dirty. So when I'm looking at something like Amazon and I want to take a trade, I've got to real quick be able to map out where is the logical price and time, okay? And if I can at least get those, it gives me a baseline. But Carolyn dives into this about 3 to 4 times deeper. And so I always like to compare what I'm doing against her work as well, because she does just really takes a deep dive into this. So the whole key with this is that these are principles that are what I come back to, especially when the markets are not clear. All right. And guess what? Right now, the markets are not clear. Every day seems like it's something new based on the latest tweet. Okay. Based on the latest China trade talk news, based on the latest Brexit news. But with these tools, the way is always a lot cleaner, and the timing and everything has been setting up like clockwork. So during chaotic times like this, entries become accurate and objective with this kind of work. The management method works brilliantly to avoid early emotional exits. And so I hope you guys just have gotten a taste of this, and I hope you're excited about these possibilities like I am. And what I'm doing right now is I've been starting to switch around my accounts. The timing has been working so well in these markets. I am making a huge bet on this work, and I'll be using this in the trading room. But I'm setting up an account with just over $1 million in it to follow this work. So now, of course, this is great for small accounts too. If you see me doing, 100 lot butterfly, great, you can do a 1 lot butterfly. But the point is that I believe in this stuff so much, I'm willing to make a big bet against it. Okay, or a big bet just with the work. So what is all this stuff? Now, for those of you that are not familiar with any of this stuff, Carolyn, myself, Danielle, and Henry, we did a 6-hour masterclass in this in January. And what we did is, Carolyn's the master, so she took the deep dive. I showed kind of the quick and dirty way that I do it. Danielle took it more from the beginner's approach, like, hey, if you're brand new, this is how you can look at it. And then Henry brought his own systematic analysis to this. And so what we're going to be doing is we're going to be offering this class again for people who haven't done it, but then doing live trading so that you can see how the stuff is setting up in today's market, taking live trades and how this is setting up in today's market, which will be pretty done. Yeah, and we will be doing timing separately as well, so you can dive into that. So the class of this is called Timing Mastery, and this is going to be, so the nice thing about this is that the 6-hour mastery class is actually ready to go. So if you're ready to dive into this, you can get instant online access. We'll be doing live trading October 22nd and 24th. And there's also a portion of this where if you would like to join us in Las Vegas on November 6th and meet us in person and play poker and craps, we'll be doing that as well. So if you would like to join us on this, you can, and we're happy to stick around here and answer questions. If you go to simplertrading.com/mastery, that will bring you to the website. And from there, you can instantly download the master class. Again, it's a 6-hour class that is ready to go right now. Okay. If you're brand new to Fibonacci, it'll also include a bonus Fibonacci 101 course. If you are newer to trading or intermediate trading and you are not familiar with this work, you are trading at a huge disadvantage by not knowing how to do this. Okay, this is something that I didn't even know existed until I'd been doing this for 8 years, and I stumbled across Carolyn's work. And I thank God for that, or I wouldn't be here talking to you guys about it right now. The whips and the pain has been worth it. But what's really fun here is that what'll happen is that Carolyn and Henry and Danielle and I will all be trading live at different intervals for 2 days on October 22nd and 24th. And this is online. You can do it from the comfort of your own home. And what's great about this is that once you kind of take the class and go through it, you can see how to do it live. Okay. How do you, when you're looking at a chart, what do? What lines do you use? What highs and lows do you use? Which timing sequences do you use? How do you set up the trade? How do you know that it's safe to get into the trade? What triggers do you take? Okay. All that's done live and it's documented. So you have checklists when we're done, so you can do this on your own. And then the elite portion of this is kind of fun because the elite portion includes, of course, all of this, but you also get a free ticket to our end of year tax loss harvesting class. This is something that we offer at $297. We have done this now for 10 years, and for 10 years in a row, this has been a money-making class. There's just a very little known unique situation happens on the last trading day of every year, and if you know what's going on, you can take advantage of it like a friendly piranha. And in addition to this, it includes a full live trading day in Las Vegas on November 6th at what used to be the Mandarin Oriental and is now the whatever hotel that took it over. My mind just went blank. Waldorf Astoria. And if for some you can come and join us there, and that's fun because we get to trade live, ask us questions. We're happy to go over your trading plan. You know, we'll play some poker, do some craps, and it's just kind of a nice event because if you're a trader, it's fun to be around other traders. A lot of times people will come there, they'll meet friends for life, trading buddies that can help them, hold them accountable, hold them down and make sure they're accountable. So it's a lot of fun. Anyway, we're happy to answer questions, but this is stuff where, I mean, you're going to see, you know, kind of a lot more action on this as well. I'm excited to introduce this to people who are not aware of it. But the main thing is that this really, I mean, this is a 6-hour class. You have instant access to it, and it's really the tour de force master class. It represents myself, Carolyn, Danielle, and Henry. So what's great about that is it's great for all kinds of trading styles and account sizes. Okay, if you're trading a big account, great. If you're just starting out, great. All points of view are represented. So Carolyn may take a deep dive and you're like, oh my God, you know, she's losing me. Then Danielle comes in and clears it up, okay? Or from a newer trader's point of view at that time, of course. So it's great because, you know, Carolyn's been doing this for, you know, I think 38 years. I'm hitting 30 years. So a lot of times when Carolyn and I are talking about something, we kind of forgot what it was like to be doing it only 2 years ago. So it's great to get all those different perspectives in there. And when I listen to Danielle, I learn new things. I'm like, oh my God, yeah, I forgot all about that. That's a great idea. I should do that. And then Henry's systematic voice of reason comes in and saves the day quite often. So that part's great. And then and the good thing is again, the class is ready to go. You can start watching it tonight. And then we just kind of go through everything like the pre-trade rituals, the Fibonacci first mindset, objective potential, tighter stops and bigger gains. And the great thing with this work is that a lot of times when I'm doing just price, like just a squeeze, I encourage people to use wide stops. Like you got to use a 2 ATR stop or you're going to get shaken out. With this work, you can use a tiny stop. And that's one of the magical things about this is that because it's so precise, you can get in and do like a half ATR stop. It's much, much, much tighter when it sets up that way. So a lot of times with this trading is that you got to be patient, but when the trade does set up, you can actually typically get in for a much better risk to reward ratio. You don't need to risk as much money and the payoff is potentially very large. So it's pretty awesome. Question from Michelle. I've only read Fibonacci analysis prior to this, so I'm still a little lost. Well, the good news about this, Michelle, is that this Fibonacci 101 class will cover that for you. So that will get you up to speed so that when you then look at this, it will make a lot of sense. John, when you have price and timing, do you still honor the rules of not being too extended? Well, Leonard, so what will happen a lot of times is that if a stock is extended and there's price and timing, it typically means the timing means it's going to reverse. So what I like to see a lot of times, if something's extended, I'm thinking like, gosh, should I get into this? I'll check. If there's timing, I won't. And if there's not timing, then I'll consider that it's got a little bit more room to go. Can we also use this to trade currencies and Forex? Absolutely. This stuff, all of the Forex traders I know are using this work combined with versions of Elliott Wave to trade Forex. That's all they use. Is the tax loss harvest trading session able to be watched online rather than attending in person? So the good news is that everything we do is recorded. So if for some reason you cannot attend it live, even the live trading sessions will be recorded. So if you can't attend it live, you'll still have access to the information. And the beauty of it is, so the nice thing about this class, the instant download, is that when we did it live, it was like drinking from a fire hose, 6 straight hours on a Saturday. Everybody was mentally wiped when it was done. And by that, I mean the attendees were like, oh my God, that was a lot of amazing information. My head is full. By doing the download, you can pause it, okay? You can do it for 30 minutes and then like, ah, man, I need a glass of wine or I need to rewatch part of this. And so it's gonna be a more effective way to really learn the information. We were actually tired after that too. I remember, Carolyn, we were sitting in the office and it was like, 6.5 hours later, it's like, somebody's got to have tequila somewhere.
Yeah.
The examples you showed earlier that had timing. So you can do timing there's different software programs. So we actually we'll use Thinkorswim for some of it. Carolyn uses a different software program as well as Thinkorswim, and she'll show you both. Does this all work with, does this work well with Forex too? So yes, this is very, very popular with Forex. Forex is a very, very technical market, and it responds incredibly well to timing. Thanks, Derek. That's 4 margaritas. I count them 4. Yeah, so David, that's a good question. Now, David's question is, if you've already taken the class, can you just participate in the live trading? So my honest answer to that question is I don't know, but I'm assuming that you could email support and that there is an answer to that. Or if somebody knows, yeah. So just email Joseph there, joseph@simplertrading.com, and he can help you with that. Does this method align with the simpler scanner results? Good question, Rob. So what I like to do with the simpler scanners, I'll go through and I'll find like, oh, these are in a squeeze. And then I can go look and say, is there timing here, right? Is there anything else here on top of it? And suddenly when you do find something like that aligns, it becomes that much more powerful. And by the way, sometimes squeezes and timing align. Guess what? Those are the most powerful ones. I use retracements and extensions on TradeStation. Can you do timing and symmetry on TradeStation? Yes, you can. It's yes, you can. That's something that they did add those tools actually. Is this good for option trading, determining the buy and sell setups for calls and puts? So Charles, absolutely. So as you were going through these charts, what we saw was price and time and symmetrical support on a stock like, say, Roku. Well, then Roku rallied $30 a share. And of course, as you know, if you're buying calls and a stock rallies $30, those calls are going to explode in value, right? So that's the idea with this too, is that you can do very simple directional trades because all the analysis is on the underlying stock itself. If the timing and price is showing for a high and it goes down, obviously if you're buying puts, you will benefit from that, and vice versa. Oh yeah, and if you already did our class in January, which is awesome, and you just want to sign up for the live trading, that's totally fine as well. Just email Joseph or Caleb at simplertrading.com and they will get you set up. In fact, let me post that up here. Well, we'll get that. Okay. Dun, dun, dun. How about the timing calculation? Yeah, so we spent about 90 minutes going through timing calculations in the class. So yeah, it's definitely in-depth, how to do it step by step. I am a beginner. Looks like you need special software to set up these trades. So Rock, if you have, I don't know what platform you have. For this, we use Thinkorswim, TradeStation. Those are pretty, and Thinkorswim's a free platform. So most platforms have Fibonacci tools. Yeah, so if you have Ameritrade, you can open up a Thinkorswim platform. That's part of a TD Ameritrade if you're not using that. Their charting platform, I think, is better than what's built into TD Ameritrade. And again, it is part of TD Ameritrade, so you'd be good to go there, and it's totally free to set it up. Okay. All right, guys. Well, awesome. If there's any other questions, we're happy to stick around. Otherwise, we just kind of want to make this short and sweet. The goal of this is, especially for those of you that are new to this concept, this is the kind of stuff that can completely change your trading trajectory. You're seeing the big bet that I'm making on this going forward. I'll be doing those trades in the room as well. And of course, during the live trading on October 22nd and 24th. So that'll be good there. All right, guys. Cool. Well, thanks, Carolyn, for sharing everything. Thanks, guys, for joining us. For those of you in the room, we'll see you there. We'll see you there tomorrow for expiration. And then once expiration is over, we're going to have a lot of crazy timing cycles coming into play. So this class is perfect timing, no pun intended for that. We will be looking at a lot of things where there's, no setup, no trade, keep it pretty simple, and really looking forward to utilizing this work through the end of the year because we are going to have some crazy moves. I think it's going to be an opportunity to make some pretty good cash as long as you understand how this works. You're able to recognize it and be patient. So it should be good. I'll leave this page up. You guys have a great night, and looking forward to working with you on the class.
All right. Thanks, you guys.